actually know my website or no?
Yes, I know your website. You sent it to me. I have you.
No?
How do I not know my investor's website? Of course I know your website.
I don't know.
It's
Okay, we're live, huh?
it's down 70% on meta.com. That's your website.
It was called, well, actually it was called All In Meta. Now it's homeless with meta.com.
Now it's Enphase saved me from being broke. That's what it is.
Actually, you bring up a good point. That's why you don't buy one stock, because if you bought one stock and that one stock crashes like Meta's doing right now, I'd be very upset. But if you look at Enphase, I'm super happy. So you can't bring me down.
So we'll talk about Enphase on another day because definitely want to get your thoughts on it. I'm gonna show some results on Meta from their investor thing, but live thoughts on the stock and what you think is going on.
Are you talking to me?
I'm talking to you. Your thoughts. Your thoughts. Now that you got at least 20 minutes to condense the results.
Well, I didn't go through everything, and the call is happening right now. But let's go over it. What does that say? Advertising revenue. So read it.
The main slide that we need to care about is where is it? DA. Oh, well, capital expenditures. Yes. So they spent $22 billion so far year to date, 2022. They spent $9.5 billion this quarter.
I think this is why you're bringing up a great chart. This is why they're getting hammered, because Mark Zuckerberg has gone all into Oculus, and you guys call it the metaverse, but he's gone a little too heavy-handed. I feel he's winning it anyway, and I think he's just trying to make sure that the next 5 years are his. That's what he's trying to do, and he's trying to outspend before Apple comes in and that tries to outspend him. So, but to go from that, what was it? From 13 billion to 22 billion. Wow. When you're not gaining subscribers and not making more revenue, that's kind of it's not smart. It's a little bit dumb, I would say.
I think that's the big point you just point out. They made 13 billion year to date, or spent 13 billion by this time, 2021, so October 2021. This year, 22 billion. October 2022. By the way, Sean, you're in the chat. If you want to join, Sean, I'll send you the link on Twitter if you have a chance, and you can come in as well. We're going to listen to the call. So that's a big thing. The other thing here, average revenue per person. So it's down a little bit, 753, nothing that crazy, but they're MAUs. So 2.95 billion. They came in with expectations or beat it a little bit. I guess your thoughts on the stock tanking 10%, even though WhatsApp is barely monetized, still 2.9 billion people. Obviously, expenditures are up and revenue is not catching up with expenditures as a percentage of expenditures. But is it worth trading 10 times forward PE to have 3 billion people that use your product every month? Gut reaction, do you think that's the case?
No, obviously I don't. I am an investor in Meta. But having said that, the fact that Mark Zuckerberg is spending like crazy, like a drunken sailor, okay? And investors right now know advertising is not going to do in a tanking economy. And that's just a simple fact. People will spend less money on advertising, right? So it's already scaling back. So I think the rats flee the ship at this point when they don't see any growth ahead, even in a year. And that's the way Wall Street works. Wall Street is not a long-term investor. Do you know that?
Yes, but
it's a quarterly investor. Every quarter has to be good.
Did you see the letter that Altimeter wrote to Zucks?
No. No.
You didn't read this? Wow. You didn't. Okay, so let me pull up this letter. By the way, the call's going to start at 5, so we have 12 minutes to analyze this thing.
Do you have it brought up, the call?
Yeah, I have everything ready. It's going to start at 5 o'clock. So this is what they... Go ahead. Keep going.
No, I was going to say that basically that if you're going to miss your numbers and you're investing in a new business, you basically you're going to be hammered no matter what. Okay. So even Google's being hammered, as we know right now, and we know Google's not failing, even though people think Meta's failing. We know they're not failing. Google's going to be heading down in the next couple of months as well. Does that mean you don't buy Google? And it's also at a forward 16 PE. Meta's at a 10. So it's possible they somehow align, the stars align, because advertising is screwed for the next, 6 months, year. The point is, do you not accumulate good companies while they go down? Is this how these long-term investors think? You know what I'm saying?
Yeah, but I feel like there's like Google being down is just whatever. Meta being down is a different. I feel
Google's down a lot. Go check at Google being down. It's not down 65%, but it's down like 50%. It's down a lot.
So Meta's down 55% compared to an average of 19% for the other FANGs. The PE ratios went from 23 to 12, which is less than half the average PE ratio of the other guys. I guess my question is, yes, Google's down, and Google's something you want to hold for the long term. But do you think investors are having problems with the thesis of Google
Yes.
is search? Search is not going anywhere. That's my question.
Yeah,
Is there a thesis issue with Meta?
Google's smarter in terms of they're not making their bet on Waymo. They didn't change the company to Waymo.
Exactly.
Okay.
Yeah.
So Mark Zuckerberg is going in all into the metaverse. You can call that. It's actually just Oculus and VR and AR. That's what he's going into. It's not the metaverse. It's just the next level of computing and another computing device. That's what he's going into. But he had to change it and make it hard to understand for Wall Street and old people. Okay. Because right now, if you're looking at the statistics of VR, you're like, well, only 10 people have bought this Oculus device. Why would you change the whole company and spend tens of billions on this when a small percentage of the money you make is from this particular business, right? So why would you do all that? And yes, I think he went a little bit heavy-handed there, and he's creating this mess, honestly. So this is like a self-fulfilling prophecy because Mark did this. If he didn't go so heavy-handed, I don't think they would be as hammered right now. I honestly don't think so. Having said that, Meta is hated by everybody universally. So it's possible it'd be hammered anyway, just because they're hated.
Yeah, it is. It's not a stock that, like, Wall Street has again. That's why that stat was so important. It's down 40% more than the other FANG stocks. So Wall Street has a different issue with Meta. The other thing here is last quarter, Google did $69 billion in revenue, and they paid $6.8 billion in capex to get that revenue. Meta did $27 billion and paid $7 billion in revenue or in expenses to get that same revenue. So Google made like about 100% more revenue or 200% more revenue than Meta, and they spent literally 20% less on their expenses to be able to get that revenue.
Well, hold on. Subtract out the whole metaverse play. What does it become then?
If the metaverse works?
No. Subtract out what they spent on basically the metaverse bet. And as you can see, they're spending 10 billion plus, right?
Yeah.
In a year, more than that, honestly. So if you take that out, their numbers are good. It's just that Mark Zuckerberg is really just going full force into this, and he doesn't care about the damage, obviously, it's causing, because investors they're not going to wait, especially Wall Street. They're based on quarters. So if they have to wait 10 years, they'll just come back in 10 years.
Yeah, Google also down about another 2% after hours. Let me look at Snapchat and see the effect on Snap.
And Google's probably heading to around $80, at least from the charts I'm watching. I'm hoping it does hit around $80. And Meta might be going down to $100. It's absolutely kind of crazy to think, but yeah, under a 10 PE, insane.
That's more than insane. That's like
it's heading to AT&T territory, which is.
How do you feel about this? At Meta, the number of employees is up 3x from 25,000 to 85,000 employees in just the last 4 years. Yeah. As a shareholder, how do you feel about that?
Well, look, I'm a long-term shareholder because I believe in this Oculus thing. So I don't agree I think Mark has gone too crazy in this, but the reason I'm investing heavier into Meta is because of the metaverse. So it's not going to do well for a long time. Let me put it this way. And I know that intrinsically. I know for the next 5 years, I'm holding almost probably a dead stock. Look, it can double from here, but I'm not buying Meta for a double. I'm buying it because I expect a much higher return. So these low numbers are not going to last. I don't think it's going to stick around the 10p. I don't think that's going to happen. But having said that, for the next 5 years, I don't think this is a great stock to own if you're trying to turn around and sell it in a year or two. I don't think that's what this play is about. But I do believe in the long term. I do believe in Oculus and the metaverse. I have 3 of them behind. Do you see a couple of them right there?
I do indeed. Yep.
So I think, my kids love it. I enjoy using it, and I'm a geezer. So I think there's somebody out there who wants to buy this product, except 3 people that I know of.
Sean, thank you for joining us. We have about 6 minutes till we get into the call. Your raw thoughts.
So I won't stay for the whole call, but first of all, V, good to see you, brother. Here's the deal. I think there's a major thesis point that's missing here at scale. On the positive side, I agree with both thoughts here that there's an asymmetry play here on the metaverse. If they get it right, and we can keep buying leaps, acquiring shares at these lower prices, the opportunity is massive. What I think a lot of folks on the retail side are not either willing to admit or do the research on, that their new users on Facebook are lower value users to the platform. So the folks that are joining Facebook, these daily active users, they're not those who are spending money the same way they used to. It's more and more being spread into different areas of the globe. Their core thesis for growth, the high spending areas, the high spending geographies, the high spending folks are leaving and not joining. Now, even if they're being retained, that's still a known cost, right? So from an advertiser's perspective, there's that piece. I think the issue is that we're looking at relatively flat to maybe slightly gaining DAUs and MAUs. But the problem is, if their only thesis is ads to users, those ads are going to continue to go down in value from a bidding perspective. So I think there's a major, major risk here that's being ignored by everyone who looks at this stock and everyone who looks at this company, by the way. However, as Vitaly said, I could not agree more that I don't mind. Listen, if you're talking about like, hey, maybe I make 30% on this thing, I'm not interested. I need to know that there is a chance of, a 200, 300, 400, 500% return or more if I play with options. So for me, the way I look at earnings like this is that there's nothing that was a surprise here, except ironically that they beat on revenue. That's unbelievable. I was expecting EPS to be a disaster. I'm not surprised there, but the beat on revenue was very surprising. And I think, though, the one thing we're going to find out is this could be a situation. I don't know this to be true, so just, keep to be fair. It could be a revenue recognition accounting rule that they're being able to take advantage of here. And that could be a driver for why we're seeing forward revenues coming into the real time.
What does that mean, revenue recognition accounting rule?
Yeah, so there's different guidelines within GAAP and how you report, especially when you're reporting publicly. So you can, for instance, structure your contracts with advertisers or with brands so that you, in theory, haven't billed them yet, but you will bill by the 15th of next month. That will still be allowed to be reviewed or shown on this earning report. Now, I'm not a CPA, so there's always different ways to approach this. You guys have seen this, right? So it could be that they wanted to beat on revenue and they found a way to do it. Completely legal, by the way, completely legal. It just means that next quarter they're going to get hammered by not being able to show those numbers. And early word on the street before this thing even hits is that Q4 is already being lowered from a guidance perspective. So there's a concurrence of two themes here. There is a lessening of value of active users, and there is a higher degree of risk of advertisers leaving the platform or spending less on the platform. On the complete flip side, there is a potential game changer in the Vitaly, like what you said, by the way, man. Like, the metaverse is a theme. The Oculus is a product. They can put a price on a product. They have to build the metaverse because that's the other side of the platform. If you can't bring people in, you're going to be in a tough spot, and you get them in via the Oculus, and you get them into the Oculus by giving them something fun to do once they have it on their head and their face. So
I want to respond to something here.
Yeah, please.
My wife runs a small business. Okay. Do you think she's using TikTok to advertise to her, to advertise to people for her small business, which sells rope?
I spent 20 grand. I spent 20 grand on Facebook advertising last year.
No, but so I'm getting to the point here. The point is that I know we talk about Facebook as like, okay, maybe the monetary value of those users is going down. But then if you look at Instagram, I don't see that going down. I see that increasing. In fact, they're always increasing. So do we care as investors whether Instagram takes over and Facebook goes down, or Facebook takes over and Instagram goes down, or WhatsApp figures out a way to monetize, or the metaverse becomes a real, like, this is what I mean. They have so many levers that they can pull. And the thing is, we keep talking about, yes, per user value might be going down, but I always think of it this way. If they're the only game in town, and people keep talking about TikTok, it's honestly it's not even relatable to what Instagram is. It's such a tiny little portion of it. But anyway, what happens if they can figure out a way to make 50 cents per user extra, $1 per user extra, $1.50? What, you see what I'm saying? Like, they have to figure this out. I'm not saying that they have.
Yeah, I think you and I are completely aligned. Actually, this goes back now a couple of months, but I know you were doing it. I released a couple of videos on how I perceive the value of the metaverse, the marketing there within. You can connect it to WhatsApp, invite your friends via the phone, hook up with them. And
everybody thinks it's a gaming device, and nobody realized what it actually is, which is crazy to me.
Totally agree. It is an unlimited platform to advertise products, clothing in the real world. How are you going to look and hang out and then have it show up at your door afterwards? I mean, to an advertiser, I have to jump in a second, guys, but I want to share a single thought here for those who have not who neither have the experience nor maybe have not thought about it this way. The problem with advertising for a small business and gathering user data is it stops when they leave your front door. They might do a survey once every 6 months. They might come back in the store with a coupon. But the value of the metaverse is that your virtual representation of yourself can track what you buy in the metaverse, how you use it, who you interact with, what things you like or don't like in real time. Those advertisements can come on WhatsApp. They can come via Facebook. They can hit you on Google Ads. They can follow you in a total 360 perspective as to how you use, leverage, interact with, and how often you touch products that otherwise would never be able to be seen before. And I think it's a really interesting dichotomy as to the future of advertising and how we can execute on that for an asymmetrical gain. Full stop, with a lot of risk, by the way. Guys, that's it. I'm so sorry to jump on and leave, but I thought seeing you two on here, you guys are great. So I just wanted to add a little bit something to it. Otherwise, I'll be watching while I'm working here.
No worries. Thanks for hopping on, Sean.
You guys, thank you.
Enjoy. Thanks.
All right, I'm going to share the call. And
at least someone's on my side. One person's on my side.
Yeah, for those who are here, you can listen. Me and Vitaly will pause it in the middle if we hear something crazy. Vitaly, you can just tell me if you want to pause. But overall, we're going to be listening to Zucks talk about Meta.
Yeah.
Let me know if you guys can't hear it. You should be able to hear it though. You hear the elevator music?
Yep.
Okay, good. Just making sure. Let's refresh it one more time. It should be starting soon.
Yeah, let it start. I mean, I really wish. I mean, Mark is so savvy because look, he took a business from nothing, right? Destroyed other people in the process, all the way to become a billionaire. So he's a smooth operator. You know what I mean? He's not a Dumbo. So I just wish he was a little bit smarter about the image of the whole thing as well. You know?
Yeah, I mean, he's definitely not a Dumbo. That is very true.
This is a super smart guy. And I think he will be proven right in the end. It's just, I think he's, sometimes people make it harder for themselves. Like when Elon goes and tweets on Twitter against like politicians and presidents, like he makes it harder for everybody, that kind of thing.
Yeah.
It's the same thing. Two highly intelligent people, but.
While we're waiting, any response to this question, why own Meta with Google, Microsoft Crowd, Tesla all on sale?
Oh, I agree. I've been buying Tesla hand over fist. So I've been buying
Did you buy when it went under 200?
I bought at 200, 208, 225. I didn't get it under 200. My next buy is actually 185. So I agree with this comment that Tesla is a way better buy. AMD is not going to do well for a long time. I don't think so because the chip problem is going to happen for the next year. Like we overbought computers during the pandemic. Microsoft, yeah. What's the upside? It's a double, right? I think Meta's a much better, and Google, I think I am buying Google. But once again, the upside is a double, maybe a triple. Meta at this point, if they do succeed, I'm telling you, it's a 5x or plus. Like that's what I think is going to happen if this succeeds. Like I did some calculations before that I had them at 2 trillion when they were worth almost like 800 billion. I was estimating around 2 trillion. I'm still estimating 2 trillion if the Oculus thing succeeds.
Okay, we're still waiting. It's starting around 5 p.m. We'll give it another couple minutes.
But good question. Tesla's definitely the king, and Enphase is better than all of this. So there you go.
So fourth quarter, they expect revenue to be 30 to 32 billion. Interesting. So that's more than that's 5 billion more on this quarter. A little bit of an increase. We expect the slight majority of our 2023 operating expense dollars to be driven by operating expenses. Conversely, our growth in cost of revenue is expected to accelerate, driven by infrastructure-led expenses and to a lesser extent, Reality Labs hardware costs. Mm-hmm. So they expect Reality Labs, which is their metaverse thing, to definitely cost them a bit more than they expect. Total expenses in 2022 to be 85 to 87 billion. That's same in guidance. Estimated total 2023 expenses to be 96 to 101 billion dollars.
Yeah, there's a catch-22 with Wall Street, by the way. The catch is that they obviously want you to grow and figure out new ways to make money, but they hate to see you do it. Okay, so anytime you have to invest in anything that's not the core business, and Elon's getting a little bit of flack, but his company, it's starting.
It's starting. Yep. Okay, we'll get into it.
Before we get started, I would like to take this opportunity to remind you that our remarks today will include forward-looking statements. Actual results may differ materially from those contemplated by these forward-looking statements. Factors that could cause these results to differ materially are set forth in today's press release and in our quarterly report on Form 10-Q filed with the SEC. Any forward-looking statements that we make on this call are based on assumptions as of today, and we undertake no obligation to update these statements as a result of new information or future events. During this call, we may present both GAAP and non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The press release and an accompanying investor presentation are available on our website at investor.fb.com. And now I'd like to turn the call over to Mark.
Hey everyone, thanks for joining today. Our community continued to grow this quarter. We now reach more than 3.7 billion people monthly across our family of apps. And while we continue to navigate some challenging dynamics, volatile macroeconomy, increasing competition, ad signal loss, and growing costs from our long-term investments, I have to say that our product trends look better from what I see than some of the commentary I've seen suggests. There's been a bunch of speculation about engagement on our apps, and what we're seeing is more positive. On Facebook specifically, the number of people using the service each day is the highest it's ever been, nearly 2 billion, and engagement trends are strong. Instagram has more than 2 billion monthly actives. WhatsApp has more than 2 billion daily actives, also with the exciting trend that North America is now our fastest growing region. Across the family, some apps may be saturated in some countries or some demographics, but overall, our apps continue to grow from a large base. We're also seeing engagement grow, especially strong growth in Reels, and I'll share more details about that when I discuss our product priorities shortly. In terms of our business, total revenue grew slightly this quarter on a constant currency basis. We're still behind where I think we should be, but we believe that we will return to healthier revenue growth trends next year. That said, it's not clear that the economy has stabilized yet, so we're planning our budget somewhat more conservatively. In 2023, we're going to focus our investment on a small number of high-priority growth areas. So that means that some teams will grow meaningfully, but most other teams will stay flat or shrink over the next year. In aggregate, we expect to end 2023 as either roughly the same size or even a slightly smaller organization than we are today. Three of the primary areas we're going to focus on.
He did say 2 billion for
our
WhatsApp,
AI
which is new.
engine that's powering
Crazy.
Reels
2
and other
billion
recommendation
dailies for WhatsApp.
experiences, our ads and business
We should
messaging
talk about it, but I think a lot of these things are
future
being
vision for
discounted
Meta.
because Facebook is not doing as well. That's why.
Right. I'm gonna see if I can pause these and go back.
I think that we should keep
Oh no, I can't. All right, so we'll just
No.
keep it and play. We'll talk in between if we have stuff.
Yeah, no, just keep playing.
income, such that even with our AI infrastructure and Reality Labs investments, we can still meaningfully grow our overall company operating income in the long term. Our current surge in CapEx is largely due to building out our AI infrastructure, and we would expect CapEx to come down as a percent of revenue over the long term. We expect Reality Labs expenses will increase meaningfully again in 2023, with the biggest drivers of that being the launch of the next generation of our consumer Quest headset and hiring.
I'll write some notes
that
down,
has been done in 2022, but
Yeah, please do
we're
that.
going to be paying the first full year of salaries next year. More broadly, beyond 2023, we expect to pace Reality Labs investments to ensure that we can achieve our goal of growing overall company operating income. Our capital allocation philosophy over the long term is to allocate a portion of the profits generated from the family of apps towards these future-focused areas, while enabling a greater return of capital to shareholders. All right, now I'd like to share some updates on the progress that we're seeing in these product areas. Our AI discovery engine is playing an increasingly important role across our products.
This is big for TikTok.
As
This is
advances
big.
enable us to recommend more interesting content from across our networks and feeds that used to be primarily driven just by the people and accounts you follow. So this, of course, includes Reels, which continues to grow quickly across our apps, both in production and consumption. There are now more than 140 billion Reels plays across Facebook and Instagram each day. That's a 50% increase from 6 months ago. Reels is incremental to time spent on our apps. The trends look good here, and we believe that we're gaining time spent share on competitors like TikTok. Over time, I expect a few things to set our products apart here. First is that our discovery engine work allows us to recommend all types of content beyond Reels as well, including photos, text, links, communities, short and
This is
long
big.
form
They don't just
videos, and
recommend
more.
videos; they recommend a lot of shit.
Second is that we can mix this content alongside posts from your family and friends, which can't be generated by AI alone. And third, as more social interactions move to messaging, we're developing a flywheel between discovery and messaging that are going to make these apps stronger. On Instagram alone, people already reshare Reels 1 billion times a day through DMs. Moving to monetization,
Wow.
I've discussed in the past how the growth of short form video creates near term challenges, since Reels doesn't monetize at the rate of feed or stories yet. That means that as Reels grows, we're displacing revenue from higher monetizing surfaces. I think this is clearly the right thing to do, so that way Reels can grow with the demand that we're seeing. But closing this gap is also a high priority. Even with the progress we've made, we're still choosing to take a more than $500 million quarterly revenue headwind with this shift, but we expect to get to a more neutral place over the next 12 to 18 months. I mentioned last quarter that Instagram Reels had crossed a $1 billion annual revenue run rate. We continue scaling monetization across both Instagram and Facebook, and the combined run rate across these apps is now $3 billion. Beyond Reels, messaging is another major monetization opportunity. Billions of people and millions of businesses use WhatsApp and Messenger every day, and we're confident that we can connect them in ways that create valuable experiences. We started with click-to-messaging ads, which lets businesses run ads on Facebook and Instagram that start a thread on Messenger, WhatsApp, or Instagram Direct, so they can communicate with customers directly. And this is one of our fastest growing ads products with a $9 billion annual run rate. And this revenue is mostly on click to Messenger today, since we started there first, but click to WhatsApp just passed a $1.5 billion run rate and growing more than 80% year over year. Paid messaging is another opportunity that we're starting to tap into.
This is for WhatsApp.
It continues to grow quickly, but from a smaller base. We're putting the foundation in place now to scale this with key partnerships like Salesforce, which lets all businesses on their platform use WhatsApp as the main messaging service to answer customer questions, send updates, and sell directly in chat. And we also launched a GeoMart on WhatsApp in India, and it's our first end-to-end shopping experience that shows the potential for chat-based commerce through messaging. So between click-to-messaging and paid messaging, I'm confident that this is going to be a big opportunity. The last area that I want to discuss today is the metaverse. We just had our Connect conference, and
I wish he would stop saying the word. He's giving.
It's our new high-end VR headset that
You
delivers
should just call it
high-resolution
the
mixed
boiling
reality.
pile of shit. Let
You
me
can
talk about
blend
that.
virtual objects
No,
into the
Oculus.
physical environment
Oculus,
around
whatever.
you. It's pretty amazing when you see it, and it's going to enable all kinds of new experiences and socializing, gaming, fitness, and work. And I'm really looking forward to seeing what people build with this new capability. Work in the metaverse is a big theme for Quest Pro. There are 200 million people who get new PCs every year, mostly for work. And our goal for the Quest Pro line over the next several years is to enable more and more of these people to get their work done in virtual and mixed reality, eventually even better than they could on PCs. And to deliver a great work and productivity experience, I'm excited about the partnerships that we announced with Microsoft bringing their suite of productivity and enterprise management services to Quest, Adobe and Autodesk bringing their creative tools, Zoom bringing their communication platform, Accenture building solutions for enterprises, and more. There's still a long road ahead to build the next computing platform, but we are clearly doing leading work here. This is a massive undertaking, and it's often going to take a few versions of each product before they become mainstream. But I think that our work here is going to be of historic importance and create the foundation for an entirely new way that we will interact with each other and blend technology into our lives, as well as the foundation for the long term of our business. So between the AI discovery engine, our ads and business messaging platforms, and our future vision for the metaverse, those are three of the areas that we're that we're focused on. I believe that the tougher prioritization, discipline, and efficiency that we are driving across the organization will help us navigate the current environment and emerge an even stronger company. As always, I'm grateful to everyone at Meta for your hard work and to all of you for being on this journey with us. And with that, I'm going to turn it over to Dave.
Thanks, Mark, and good afternoon, everyone. Let's begin with our consolidated results. All comparisons are on a year-over-year basis unless otherwise noted. Q3 total revenue was $27.7 billion, down 4% or up 2% on a constant currency basis. Had foreign exchange rates remained constant with Q3 of last year, total revenue would have been approximately $1.8 billion higher. Q3 total expenses were $22.1 billion, up 19% compared to last year. This includes a $413 million impairment of certain operating leases as part of our ongoing work to align our office facilities footprint with our anticipated operating needs. In terms of the specific line items, cost of revenue decreased 1% as a reduction in Reality Labs hardware costs was offset by growth in infrastructure and content-related expenses. R&D increased 45%.
Okay, so let's talk a little bit. The cost of financials is boring stuff. We're going to get to the Q&A probably in 5 minutes. What are your thoughts on Zucks and what he just said? Anything surprise you? You're on mute.
So he's gotten way better at speaking, by the way, which I'm happy to hear. I know you have some comments where he's a robot, but he's no longer a robot. He's now half human. Okay,
Yes.
so I actually like he's much better at speaking now in public and all the interviews he's done. But in terms of what he's talking about, I'm actually excited. And I think people ignore this, and I wrote a note here, but the AI discovery engine, which nobody really talks about, how he can monetize across platforms, and this is why the Oculus thing is important because it's all going to connect to Meta, Facebook, etc. The other thing that he went a little bit into it. Some of their capex is for the actual AI facility that they're building out. Have you seen some of the work they're doing in AI?
Yep, with the language processing and all that stuff. Yep.
So I think people are ignoring. I don't know what Mark is thinking exactly, but I'm hoping he's thinking there's a way to monetize this, just like Tesla's trying to monetize Dojo eventually.
Mm-hmm.
The same thing, like Google is monetizing the cloud. I believe there's a business there that's so big that Facebook's AI, which is massive, by the way, they're an amazing AI company, and everybody discounts that because they're not out there pitching it to other people. Do you know what I mean?
Yes.
I think that can be a real driver of growth if Mark is thinking in this direction. I think he is. I just think it's not ready yet. He wants to bring a product that's sort of ready with the metaverse. Everything's working together. You can speak through it. It translates for you. You know what I'm saying, right? It interacts between multiple apps. You have a customer here reaching out on Facebook. All of a sudden, you can talk to them on WhatsApp. So these services are valuable. Like if you think about it, this is valuable to especially businesses and people who want to connect. I don't see the TikTok version of this doing that. I just don't. Maybe I'm wrong or I'm too old, but I think they got a great business ahead of them.
Yeah, so the AI discovery thing, I want to pull attention to this real quick. So I pulled up Facebook on my phone. As you guys can see, I have a article. You see how it says suggested for you right underneath futurism? I don't follow that blog. I don't know that blog, but obviously Facebook thinks I would click on that article. That's not what TikTok is doing. TikTok is showing you videos. So here's a really interesting dichotomy, and either you're bullish or bearish on this. TikTok's like, screw all the photos and articles and links. We're just going to give you high quality, engaging video content, which means more creators have a chance to get discovered and engaged with all that stuff, and we put it in your face. Facebook's like, okay, that's fine, but what if we could recommend you with this AI that gets better and better exponentially, articles and videos and photos from people you didn't see before, and Instagram becomes a discovery engine for photos versus videos. Either you're bullish that discovery engine overall in the macro is better, or you're bearish because TikTok is just so fast hitting with their AI for videos, and all people want is video. Therefore, video wins at the end.
Yeah, I feel that's short-sighted. I could see that taking a lot of business. Don't get me wrong, but we want to communicate way more than just watching girls dancing in TikTok videos. Like, and that's honestly, at least maybe that's all I'm served. But
well, that tells a little bit about what you watch. All right,
that's what I click.
Let me see if they're still doing finance or questions.
And click to messaging ads. North America and Europe declined 3% and 16%.
Okay, they're still doing a little bit of money stuff. We'll go in like 2 minutes. Okay, the thing he said about WhatsApp and commerce on WhatsApp and selling TV. Someone in the chat said they bought a fucking TV on WhatsApp. I mean,
Oh, that's
this is
crazy.
stuff where you and me have to put our foreign hats on, because you and me are stuck in the Western world. We're not buying shit off WhatsApp, but people in
No.
India, I'm assuming, are. That's a big opportunity.
Yeah, I wrote this down too, which I didn't know. Obviously, I'm not paying attention to every business, but GeoMart on WhatsApp. If anybody knows what that is that a big marketplace for India? And if that's happening on WhatsApp now, and you like you said, you're purchasing stuff. This is what I mean. Like, Facebook can connect you with so many ways that they haven't fully monetized yet. So I think when people are down on Facebook, they're down on the actual Facebook.com. They're not talking about WhatsApp. They're not talking about Instagram. They barely know about Oculus. They haven't used it. So I feel there's all these businesses that Facebook can get in, like this AI thing too. I'm pretty bullish on that. GeoMart, It's called GeoMart.
GeoMart, yep.
If that's on WhatsApp, I don't know, but end-to-end marketplace.
It's likely integrated on WhatsApp. Yeah, man, it's exciting. WhatsApp to me is their Trojan horse. Like 440 million now. He said 2 billion daily. He said 2 billion daily on WhatsApp. That's what he said.
And he also said they were monetizing it. I wrote down a number. Did he actually say 9 billion annual run rate? Did he say that? No, he said WhatsApp 1.5 billion run rate and 80% growth. That's what he said. I have it here.
Okay, let's get back into the call.
Yeah.
Revenue to be in the range of $30 to $32.5 billion.
That's
Our
for
guidance
Q4.
assumes foreign currency will be an approximately 7% headwind to year-over-year total revenue growth in the fourth quarter based on current exchange rates. Before turning to the expense outlook, I wanted to provide some context on the approach we are taking towards setting our 2023 budget. We are making significant changes across the board to operate more efficiently. We are holding some teams flat in terms of headcount, shrinking others, and investing headcount growth only in our highest priorities. As a result, we expect headcount at the end of 2023 will be approximately in line with third quarter 2022 levels. We've increased scrutiny on all areas of operating expenses. However, these moves follow a substantial investment cycle, so they will take time to play out in terms of our overall expense trajectory. Some steps, like the ongoing rationalization of our office footprint, will lead to incremental costs in the near term. This should set us up well for future years when we expect to return to higher rates of revenue growth. Turning
Bring
now
up the
to
stock price,
specific expense
because it's
outlook
tanking
for
as they
22
talk.
or 23. We expect 2022 total
Hold on.
expenses to be in the range of $85 to $87 billion, updated from our prior outlook of $85 to $88 billion. This includes an estimated $900 million in additional charges in Q4 related to consolidating our office facilities footprint that we expect.
They're still doing financials. I got to share a different screen. StreamYard has to have the ability to let me see both. I paid for Pro. I don't know why they don't let me do that. But yeah, let me share Google. It's tanking in real time. Where is it at right now? I didn't even look. It is at 109. It's below 110.
It's 15% down.
Woo! Were you thinking of buying puts before?
Puts? No. What do you mean?
Or sorry,
Selling puts, buying calls. Actually, as this comes down, and I think it was mentioned, but and I wrote it on our Discord that I'm buying calls at roughly $100, and then I'll buy some more as it heads down if it does head down. But to me, it's a black and white situation. It's like either this metaverse is going to work in some respect, and Facebook is going to return to some growth, and that should happen within a couple of years, meaning some growth. I'm not expecting a 10x in a couple of years, but so then the calls would be absolutely massive. And what's his name? He mentioned it on the call. What was that?
Yeah.
I'm forgetting his name. Invest to Live. What was his name?
Sean. How do you
Sean? Yeah, I'm forgetting names. Sorry, Sean. But Sean talked about calls, and basically, absolutely, I think it's going to be a black and white situation. Either those calls expire completely worthless, of course, or those calls are going to print tendies. That's what I'm hoping for. And 2025 calls, leaps, basically. We'll see what happens.
Which is primarily driven by two large areas of investment. First, we are significantly expanding our AI capacity. These investments are driving substantially all of our capital expenditure growth in 2023. There's some increased capital intensity that comes with moving more of our infrastructure to AI. It requires more expensive servers and networking equipment, and we are building new data centers specifically equipped to support next generation AI hardware. We expect these investments to provide us a technology advantage and unlock meaningful improvements across many of our key initiatives, including Feed, Reels, and Ads. We are carefully evaluating the return we achieve from these investments. which will inform the scale of our AI investment beyond 2023. Second, we are making ongoing investments in our data center footprint. In recent years, we have stepped up our investment in bringing more data center capacity online, and that work is ongoing in 2023. We believe the additional data center capacity will provide us greater flexibility with the types of servers we purchase and allow us to use them for longer, which we expect to generate greater cost efficiencies over time. These investments, along with revenue headwinds, are contributing to higher capital expenditures as a percentage of revenue in 2022 and 2023 than we expect over the long term. Turning now to the specific CapEx outlook for 22 and 23. We expect 2022 capital expenditures, including principal payments on finance leases, to be in the range of $32 to $33 billion, updated from our prior range of $30 to $34 billion. For 2023, we expect capital expenditures to be in the range of $34 to $39 billion, driven by our investments in data center, servers, and network infrastructure. An increase in AI capacity is driving substantially all of our capital expenditure growth in 2023. Turning to tax. Absent any changes to U.S. tax law, we expect our fourth quarter 2022 and our full year 2023 tax rate to be similar to the third quarter 2022 rate. In addition, as noted on previous calls, we continue to monitor developments regarding the viability of transatlantic data transfers and their potential impact on our European operations. In closing, we are pleased with the growth of the community using our family of apps and the engagement improvements we are driving with efforts such as Reels and our AI-powered
No, they're not.
content
They're not
recommendations.
pleased.
While we are facing near-term headwinds on revenue, the fundamentals are there for a
That word
return to stronger
headwinds is so
top-line growth.
funny to me, bro.
We are approaching 2023 with
It's a
focus
fart in
on
the wind.
efficiency and spending discipline, and I'm optimistic that these moves will set us up well to achieve our goal of driving operating income growth over the long term while investing for future growth.
He was about to say dream.
On a
Our
personal note,
dream.
I'll be closing out a decade at Meta in the next couple of weeks, including the
Bruh.
last 8 years as CFO. In my new role, I'm looking forward to continuing to help the company achieve its long-term mission and execute on its financial plan. I couldn't be happier to hand off the CFO role to Susan Li, who is one of the most talented executives that I've had a chance to work with in my long career in finance and tech. And with that, Martin, let me open up the call for questions.
All right,
you.
here we go.
We will now
Questions.
open the lines for a question and answer session. To ask a question, press 1 followed by
I
the
got a
number
question.
4
Can you
on your
shut down this
touch-tone
metaverse,
phone.
please?
Please pick up your headset before asking your question to ensure clarity.
Someone's going to ask that in a
If you are
diplomatic way
streaming
today.
today's call, please mute your
Right.
computer
Can you stop
speakers.
spending money?
Your first question comes from the line of Brian Novak with Morgan Stanley.
Thanks for taking my questions. If I could squeeze in two. The first one is on CapEx and return on invested capital. Yeah, the
There you
CapEx
go.
spend and forward expectations are remaining somewhat higher than investors expected. So, Mark, can you
A
maybe
little
just give us
higher.
some examples of what these new AI investments are going to enable you to do differently going forward than in the past? And what's a reasonable period in which investors should expect to see material incremental engagement or revenue from these? And then the second one is on engagement. I thought your comments about incremental time spent from Reels were interesting, but maybe just to sort of address the big topic around time spent, can you give us any update on what U.S. time spent trends look like, just to sort of give investors some incremental confidence in the durability of the platform in your oldest market? Thanks.
Hey, Brian, why don't I take the time spent question first, and then I'll hand it off to Susan on the CapEx question. So on time spent, we are really pleased with what we're seeing on engagement. And as Mark mentioned, Reels is incremental to time spent. Specifically, in terms of aggregate time spent on Instagram and Facebook, both are up year over year and in both the US and globally. So while we're not specifically optimizing for time spent, those trends are positive. And we aren't specifically optimizing for time spent, as that would tend to tilt us towards longer form video, and we're actually focused more on short form and other types of content. So just some color on time spent. And Susan, you want to take the CapEx question?
Yes, thanks, Brian. So as Dave mentioned in his script, we expect 2023 CapEx to be in the range of 34 to 39 billion, with our investments in AI driving all of that growth. We're very focused on evaluating the ROI of our AI investments, and that'll inform our level of future spend. But so far, we've seen continued strong impact on our recommendations products from advancing developments in our AI work. In the Q2 call, we had shared that a single AI advancement in scaling our recommendations models had led to a 15% watch time gain for Facebook Reels, and that gain has continued to grow, and we expect that there will be additional watch time improvements coming from that work. On the ad side, we're also continuing to roll out more AI and ML improvements in some of the new ads offerings, and we're encouraged by all of the early examples that we've seen. So this is something that we'll be watching very closely. We think we're early in this journey, but our level of CapEx investment will depend on the returns that we generate through these investments in AI. And if we generate significant engagement and revenue gains, we'll continue investing here. And if we don't, we'll pace our spending accordingly.
Your next question comes from the line of
I think they wanted to hear that last part,
Bernstein.
that we will lower our spend.
Yeah. Even though
yes,
they're
I
lying
mentioned
about
in
that,
my
they're not going to
question.
do
A
lower.
couple of them. Mark, the first one, you kind of mentioned in your opening remarks that you expect, to get back to kind of revenue growth in 2023. Any color you can share on kind of the key drivers behind that and how much of that is, macro-driven versus some of these initiatives that you guys are working on. And then secondly, for Susan, as we think about kind of, the operating expense guidance, into 2023, I know historically, those numbers have tended to skew a bit conservative. How much conservatism is baked in there, and how much flexibility is there to kind of, toggle some of those expenses depending on the health of core? Thank you.
So, Mark, it's Dave. I'll take the first question. Obviously, we're continuing to see, significant, macro headwinds in the business. We do think there's a big cyclical factor here, so some of it is just going to depend on the broader economy and recovery that we see. But we're continuing to make progress in a number of areas in terms of growth, and Mark cited one of those, which is click-to-messaging ads, which has been a solid grower. It's a $9 billion revenue run rate today, and we're continuing to make good progress on click-to-messaging ads as a driver. That's especially been important in some of the developing markets. And overall, we're focusing on a number of areas to grow revenue as we get through this tough cycle. And we're seeing progress on a number of fronts, but it's going to depend to some extent on what the overall macro climate is like. We're not going to be facing as significant headwinds next year from the Signals point of view, as we are now lapping the big changes that were made on the iOS platform. So that's going to also not factor in as strongly in our growth rates next year.
And I'll take that second question on next year's OpEx guide. One thing I'd point out first is just next year's guide includes an estimated $2 billion in 2023 expenses that are one-time charges as part of our office facilities consolidation as we continue to rationalize our real estate footprint. We also expect a little over half of our expense dollar growth in 2023 to come from OpEx, with the rest coming from cost of revenue. On the OpEx side, the growth in 2023 OpEx is primarily driven by headcount-related costs from employees that we've already hired through 2022, and those hires have primarily been concentrated in technical and more senior roles. So we expect, the slowdown in payroll growth in 2023 will be the result of the slowdown in headcount growth overall. As we mentioned, we expect to end 2023, with headcount roughly flat to where we are now. And on the cost of revenue side, we expect, the growth rate of cost of revenue to accelerate in 23, driven by the increased depreciation that we're seeing play through from the big CapEx investments that, we've made so far. And then as well as from Reality Labs with the launch of the next generation of the Consumer Quest headset later next year.
Your next question comes from the line of Justin Post with Bank of America.
Great. A couple questions on the Reels transition. When you think about that business,
this is important,
and people coming to the site, do you think how does it compare to the news feed as far as repeat rates or retention? And are you a little worried that it's a little less proprietary than your prior content? And then second, I think there are a lot of questions on CapEx. Just wondering if the build here for this year and next is one time to kind of get your capabilities in place, and then maybe you can go back to kind of a mid-teens level as a percentage of revenue, or is this the transition in the business just a higher capital intensity business? Thank you.
Justin, on the Reels transition, as Mark noted, it is incremental to time spent. So we are seeing a benefit from Reels to contributing to overall engagement on the platform. And it's, contributing to healthy engagement dynamics. And I'd say that coupled with our recommendation engine, which is also, increasing engagement on the platform, are both promising trends on the engagement front. From a monetization perspective, we are still working to close the gap between Reels and Feeds and Stories, but it's going to take, time before Reels becomes a tailwind to revenue. As Mark mentioned, we're on about a $3 billion run rate today, but Reels was still, negative overall to revenue by about $500 million in the quarter. So, we expect that it should be a tailwind to the business eventually, and we're sort of saying that's probably in the 12 to 18 month time frame. But overall, we're pleased with the impact that Reels has on the business, specifically on the engagement front.
And on your second question about the CapEx guide, I would really think about our CapEx investment as kind of the AI and non-AI components. On the AI side, which really is driving all of the CapEx growth in 2023, we will be pacing that future investment on the basis of the returns that we're able to see and measure. So frankly, we're hopeful that there will be a big opportunity to invest more here because we expect that this will be a high ROI area of investment for us. On the non-AI side, a lot of that spend is in ongoing investments on our data center footprint, where we had stepped up our investment in recent years to build sort of ahead of our anticipated capacity needs, and that work continues in 2023. We do expect this component of our CapEx spend to become more efficient over time, and we're actively looking for more efficiencies there. So I don't know that we are benchmarking to an exact number on the combination of those two things. The future intensity, I think, is going to depend on the returns that we generate through those increased AI investments.
Yeah, and maybe I'll just add some color on how I'm seeing this too, just because the Reels and Discovery Engine work is such a big part of what we're spending our time and energy on right now. I think that there are two comparisons to the things that we've done in the past year that are worth anchoring on. For Reels monetization specifically, anytime we've had a new format, like when we added Stories, or even before that when we were primarily on desktop and we shifted to mobile feed, we sort of had this dynamic where we focused on increasing engagement and growing demand for the product. But while that was happening, monetization efficiency for the new format lagged behind kind of the news feed or mobile news feed compared to Stories for some period while that was ramping up. And while it's really hard for us to answer questions now that are like, what is the eventual monetization efficiency going to be? It's really hard to predict that in advance. What I can say is that I think on Stories, we've ended up achieving something that was way greater than what we even hoped to achieve at the time, right? In terms of where we thought that Stories could net out. And a lot of the progress that we've been making on Reels monetization so far has been at a clip that we've been pretty happy with. So, obviously we want to close the monetization gap as quickly as possible. We want this to be a tailwind, not a headwind. I think we're going to get there. But I think we've gone through a few of these transitions, and I think that'll just take some time. On the engagement side, in terms of how incremental this is, the basic way to think about this is you have a set amount of inventory across the system. There's content from family and friends, which is quite differentiated and valuable, and accounts that you follow. But now there's this whole larger corpus that we can use AI to effectively understand what the content means and understand individually what you might be interested in, and just have access to a much bigger corpus of content to put into your feeds and increase engagement. And we're seeing that start to work already and be incremental in terms of having more people use the services, having them spend more time, having them spend, just engage more in feeds overall. So that part of things we think is going well. We think we should be able to continue driving results. Some of the results already have been due to some of the AI investments and infrastructure that we've made. If our bets are correct, then the AI CapEx that we're bringing online should be able to drive incremental engagement That's pretty meaningful there. But we think qualitatively that investment makes just a lot of sense given the direction that the world seems to be going in. And I do think that our somewhat unique mix of both having the kind of social friends and family content and the ability to drive recommendations, which I agree with some,
That's where I think he's wrong. No one gives a fuck about your social
that
friends and
creators
family.
do want their
I think he's
content
wrong
to
on
be
that.
multiple platforms, which I think is a little bit different from friends content, where you want to, for the most part, share where your friends are.
Well, I think Facebook has no choice but to keep that there. They can't get
Yeah,
rid
well,
of
they
that.
have to. Yeah, they have to. But that's where TikTok has an advantage. They can show you anybody.
And that should grow over time. But it's hard for us to be more specific than that now.
Like, Vitaly, do you really care about your
but I do
friends?
think that these,
Like from
these
high school, like
trends,
you don't care anymore.
I mean, I
you
get
know?
that this takes a
yeah,
little
but
longer
that's
to play
because
out
I never cared.
than you would want. But we've been through a couple of these
But that's
cycles
different. I
before
think some
already,
people do care.
and
My wife
I'm pretty
cares.
confident this is going in a good direction.
I mean, I'm not married on the
Your
internet. I
next
just want to make
question
that
comes
clear.
from line of Doug Anmuth with JP Morgan.
Yeah, given those videos you watch, I know.
Thanks for taking the questions. I have two. Dave, you talked about the ATT impact diminishing in 3Q just as you lap the rollout. Curious if you're seeing any meaningful improvements around ATT, or is this just a function of the year-over-year comp dynamic? And then second, can you just talk about your efforts to attract content creators to Reels, and does revenue sharing impact your margin structure versus the current ad formats and surfaces? Thanks.
So in terms of ATT impact, we're the primary factor is the lapping factor relative to Q2. So in Q2 of 2021, ATT had not been fully rolled out. It was, largely rolled out by Q3 of 21. So the fact that we were lapping that period in the third quarter, we got a benefit relative to the second quarter, but that was offset by continued macro weakness. In terms of the efforts to attract content creators, and specifically as it relates to the overall cost structure, we don't anticipate that that's going to have a meaningful impact to the cost structure, and obviously it's factored into our expense guidance.
Hey, your next question comes from the line of Eric Sheridan with Goldman Sachs.
Thanks for taking the questions. Maybe two, if I can. Mark, I would love for you to weigh in. Obviously, the company has faced a lot of headwinds from platform changes, competitive dynamics, and broader macro impacts, as we've talked about over the last 12 to 24 months. How much of this investment cycle is informed by your views around future-proofing the platform so there are less externalities that can impact it, and you're in control more of your own destiny, versus elements of curveballs that can be thrown at you that can cause volatility in the business in the medium to long term? And then I'd love to ask one on the metaverse.
He's basically talking about Apple.
Understood on the investment cadence for the metaverse for the next 2 years. Even if qualitatively, how should investors think about the revenue opportunity over the next 3 to 5 years, split between the hardware opportunity and the non-hardware opportunity as you see it, as the metaverse evolves?
Sure. I can take the first one, and then I guess I could take the second one too. So the first question was, what was this?
Uh-oh,
Yeah,
that
right.
stock's
Okay, so
dropping, baby. He doesn't know the question.
I think that's a factor, but it's not the primary thing that's driving it. So on the business side, I think
Well,
certainly
it's getting
you
closer
see
to my call
dynamics,
price. $100.
like what Apple
Grab a call or two.
has done with ATT and continues to do in some ways with the policy that they announced yesterday, which are obviously big risks and we see as issues. But there are also other things that we just believe that we've invested so much in measurement over time because since our ads help people higher up in the funnel than search ads, for example, we think that often less of the value of sales is attributed to us than should be. So for all these reasons, having a funnel that's more integrated, where we do more commerce internally. This is a big part of what we hope to achieve with business messaging, and the fact that you can find a customer, have a thread directly with them in a business chat, and be able to sell a product directly, or to be able to do customer support and then help people out with a product, and then maybe sell them something else. That kind of integration, I think, is going to be valuable very broadly, in terms of making sure that the value that we're creating for businesses and consumers can be more efficiently measured and attributed to our services. A lot of this, though, is it's not just about fortifying against outside threats. A lot of this is just, you can build new and innovative things by when you control more of the stack yourself. So I mean, in the metaverse sense, a lot of the things that we're trying to enable, right? This feeling of presence, which in a lot of ways is sort of the ultimate social experience. When you do it physically, or eventually, when as you're doing it virtually, being able to design the hardware so that way you can have sensors that can help map your facial expressions and emotions to the avatar that you have virtually, I think is going to be just a very profound experience, and you can start to experience that with Quest Pro, which is out now. And it's just not clear, if we weren't driving this forward, that anyone else would be. So I think that sort of integration and innovation is really helpful. Similarly, I think the fact that we can create a lot of the business and commerce platform around our messaging platform products, but then link to them from Facebook and Instagram, creates some unique experiences that I think would be very hard to create otherwise as well. Just in terms of having that kind of full loop in the product. So I think that like enabling more experiences, I think, is really the primary driver, and then the sort of fortification against external risks is certainly a strategic advantage over the long term, but probably not the only reason why we're doing this.
Your next question comes from the line of Youssef Squali with Truist.
Great, thank you very much. Maybe one question for Dave or Susan, and then one for Mark. What kind of base case assumptions for macro are you guys baking in for 2023 with against that 12 to 15% increase in OPEX and CAPEX guide? And can you talk about maybe the fixed versus variable component in the expense guide that could give you the
should check my last
flexibility to
comment.
address
I'm
the
responding.
macro changes next year? And Mark, relative to your own expectations when you decided to pursue
That's
the metaverse
funny.
strategy a couple years ago,
No one
would
has
you
to
rate
stay
the
there,
company's
man.
performance to date in terms of product rollout, engagement with things like Horizon Worlds, et cetera? And is the opportunity evolving, in line
You
with
should
your
put that
your
up. This is like a
expectations?
Palantir
What are
earnings
the
call.
key gating factors? Thank you.
Hi, it's Susan
That's
on the
good.
first question.
Banging
We
on the
haven't
desk.
given revenue guidance yet for 2023, but our
Amit is like
Q4
Kathy Wood.
2022 guide is a range, and that range certainly encompasses, I think, a wide variety of macro expectations. We're certainly in a period right now where we are seeing a slowdown in advertising demand, and that correlates with a lot of things that we're seeing outside of just our sector here, including rising inflation and supply chain issues sort of more broadly across the economy. So with that in mind, we have undertaken a 2023 budget process that has applied higher scrutiny to almost all of the areas of our very broad investment portfolio, and we have taken what is an intentionally more conservative approach to our budget and our anticipated growth. You asked about the sort of fixed versus variable components of the 2023 OPEX guide. I think I'd mentioned that a little over half of that is coming from OPEX, the rest from cost of revenue. So the cost of revenue piece, that has the sort of the growth and depreciation, which is certainly fixed and, is just playing through from prior year CAPEX growth. Part of that is coming from Reality Labs and the launch of the next gen consumer Quest headset. So that sort of corresponds to the product launch. And then on the OPEX side, a lot of the growth in 2023 OPEX is coming from employees who we've already hired. We expect that we're going to, have the same number of employees, end of 2023. So that's an area where, we're pretty focused on being disciplined also. And then finally, I'd just mention again, there's that $2 billion office facilities consolidation charge that's also included in the 23 OpEx guide.
Sure. And in terms of the metaverse efforts and kind of how we're doing compared to what I expected, it's a pretty wide portfolio of things that we're working on, which I think is important to internalize, because what I think most people see are the VR headsets, right? Because that's sort of the first thing that we launched. I mean, Quest 2 is the first mainstream VR headset. I kind of think about what we're doing. There's 4 major platforms that we're focused on developing. One is the kind of social metaverse platform, where you see an early version of that with Horizon, with the Avatar system. And that's an area where we're really, we're iterating out in the open, right? It's a kind of a live, early product platform. And that's evolving quickly. But obviously has a long way to go before it's going to be what we aspire for it to be. But that's one important area that's, given what we do is sort of the social company that's about people interacting, how you express yourself in all forms, the kind of expressive avatars, the photorealistic avatars. We think we're doing some leading work there, but obviously we need to get that into the product and continue iterating on that. VR is the second major platform. In there, I think that there's going to be a consumer-focused product that probably will reach very large scale. But there's also, I think, going to be a work-focused product that, it's like you don't, do most of your work on a $500 device. We have computers and workstations that are much more powerful and have more technology in them. And I think that that's going to end up being similar here as well. So we started that with Quest Pro, and we're sort of at the start of the journey there. The 2 other areas which are mostly, which are still internal, is a lot of the work on augmented reality, which is a quite a large effort, but we think is going to be just a huge part of the value that gets created over time. And there, a lot of what I'm judging is, how well are the R&D efforts going? There are some kind of basic things that we need to get right, some integration of things, some figuring out how to manufacture things, and where we're making progress on that. And I'd say, a bunch of that is that there are some things that are going better than I expected, some things that seem like they might take a bit longer. But overall, I mean, there's none of the indications that I have would suggest that that anyone else in the world is doing leading work ahead of us in those areas, even though we haven't obviously shipped the AR glasses yet. And then the fourth platform, after the kind of social platforms, VR and AR, is neural interface.
Are we at 106 right now?
The kind of wrist-based EMG interface.
Hold on, I'm about to check.
For all these computing platforms, there's
Oh
going
my
to end up
God,
being,
yeah.
Input is
Below
the really important
106.
part. How do you basically control the computing platform?
There it is,
And,
105.
we think by the time that you have glasses,
I
and
can't
you're
get a
kind of
call
walking down
until
the street
tomorrow
with
morning,
glasses, you're not going to have controllers
Oh
with
my
that.
God, it's not
You're not going to want
20%
to
after
have
hours.
your hands kind of like hovering in the air, and you're not always going to want to talk to the thing, even though that's going to be one way that we use them a bunch of the time. Sometimes you're going to want something that's more private. So we think that having a discrete way to basically communicate with the device is going to be critical, and that's also an area where
Meta at
as far
IPO
as I
price,
can
that'd
see,
be
the research
amazing.
that we're doing is
It came out at
really
$75, by the way.
leading here.
IPO'd. He's
So
writing
it's a pretty
25,
big
and then it
service.
fell to
I
25.
know that sometimes
And that's when I first bought it, by the way.
and there's a meme where people say,
2012?
"Hey, you're spending all this money and you've produced this thing," and it's
And I sold that in the hundreds, so I
think that
didn't ride it
not
all
really
this time.
the right way to think about it. I think that there's a number of different products and platforms that we're building where we think we're doing leading work that will become launching consumer products and then eventually mature products at different cadences in different periods of time over the next 5 to 10 years. And in all of these areas, I think the teams are making very good progress, and I think that this will be fundamentally important for the future. Nothing that we're seeing suggests that that's not going to be the case. We are pacing a bunch of the investments given the the kind of macroeconomic environment and the rest of the business performance. But ultimately, I mean, look, I get that a lot of people might disagree with this investment, but from what I can tell, I think that this is going to be a very important thing, and I think it would be a mistake for us to not focus on any of these areas, which I think are going to be fundamentally important to the future.
I think he's right about that.
So we're going to try to do this in a way that is responsible and matches the way that the rest of the business is growing over time. And I think we've built up the team to a point now where I think we'll be able to kind of match that growth with the rest of the business more going forward. But over time, I think that these are going to end up being very important investments for the future of our business, and I think is some of the most historic work that we're doing that I think people are going to look back on decades from now and talk about the importance of the work that was done here.
Your next question comes from the line of Mark Mahaney with Evercore ISI.
I want to follow up on a prior question. It's back on the ad tools, and I'm trying to figure out how much of a priority it is for the company and how long the company thinks it can take to kind of recover or to create a new, probabilistic ad attribution model, probabilistically based ad targeting model. This is something that took $10 billion, maybe out of your business. I mean, it had a material financial impact. And listening to the call, I just don't hear it as a major investment priority. So the question is, is it a major investment priority, or is it that goal is just elusive and it's better to focus on other things? Thanks a lot.
Hi, Mark. I'll take this question. We have continued our broader work to rebuild meaningful elements of our ad tech so our system can improve performance and measurement and we've been making investments in the short and the medium term and over the long term. In the short and the medium term, what we've been very focused on is evolving our ad system by growing on-site conversions with products like lead ads and ads that click to message. And we're continuing to make investments in AI, machine learning to improve measurement, targeting, and delivery. We have been pleased with our progress that we've made this quarter to help advertisers improve performance, targeting, and measurement. I would be remiss if I didn't talk about how AI and ML is really helping advertisers. One example of this is Advantage+ Shopping. We launched it in August. It's a product that's enabled by machine learning that helps clients test, learn, and optimize their campaigns faster. It's early, but a recent test across a cross-section of advertisers found that those using Advantage+ shopping campaigns saw a 32% increase in return on ad spend. Over the longer term, we're focused on investing in privacy-enhancing technologies, both our own portfolio of solutions, but also working with the industry to do that. And all of this is in the spirit of investing in this technology to help advertisers get more value.
Great. Thanks, Marnie. Operator, we have time for one last question.
Thank you. That will come from the line of Brent Thill with Jefferies.
I think kind of summing up how investors are feeling right now is that there are just too many experimental bets versus proven bets on the core. And I'm curious if you can just add more color why you don't feel these are experimental. You feel like they pay off. There's obviously a lot of focus on the investment side. And I think everyone would love to hear why you think this pays off.
It's a good question.
Yeah, and let me take at least part of that. I mean, we're making a number of investments across the portfolio. Marnie outlined some that we're making in the ad space. Obviously, the investments that we're making in product areas like Reels and the business messaging platform at WhatsApp are ones that we think will have a significant payoff in business, both in terms of engagement and monetization. So we're making a wide portfolio of bets. Still the majority of our spending is directed towards our family of apps investment, and those are across both engagement and monetization, leveraging AI in many cases, and we're making good progress on those fronts. And then leveraging as well what is today, a fairly under-monetized resource in terms of our messaging platforms, building more scale around those as being a source of future revenue growth. We've already proven it out with our business our click to message ads with a $9 billion business today. But we think we can build a substantial sized business around paid messaging, which will complement that as well. So, I think we've got a lot of bets across the family of apps portfolio, in addition to the work that we're doing on Reality Labs in the metaverse.
Yeah, I just say that there's a difference between something being experimental and not knowing how good it's going to end up being. But I think a lot of the things that we're working on across the family of apps we're quite confident that they're going to work and be good. The Reels work, the Discovery Engine work, all the ads work on Signals, the business messaging work. We can't tell you right now how big they're going to scale to be. But I think that each of these things are kind of going in the right direction. Obviously the metaverse work is a longer term set of efforts that we're working on. But I don't know. I think that is going to end up working too. So, yeah, I think that there are a number of different. There are a lot of things going on right now in the business and in the world, and so it's hard to have like a simple, we're going to do this one thing and that's going to solve all the issues. I mean, there's macroeconomic issues. There's a lot of competition. There's ads challenges, especially coming from Apple. And then there's some of the longer term things that we're taking on expenses because we believe that they're going to provide greater returns over time. And I think we're going to resolve each of these things over different periods of time. And I appreciate the patience, and I think that those who are patient and invest with us will end up being rewarded.
Booyah.
Adding to what Mark just said,
That didn't sound good at all.
It is a challenging time for advertisers, and what they are focused on, given the economic uncertainty, is getting a strong return on investment. Going back to the family of apps and services, Reels continues to be the fastest growing format on Instagram and Facebook, and it is a great way for people to discover new interest creators and connect with businesses. What we're focused on is making sure that businesses get a strong ROI on Reels. And one example that shows that we're delivering on this in terms of our investments is Corkcicle, which is the insulated drinkware brand that added Reels to its business as usual strategy and saw a 34% higher return on ad spend and a 34% higher sales. So we are making progress with our investments and helping advertisers find that ROI that they're looking for.
Great. Thank you, everybody, for joining us today.
Okay.
What do you think?
I mean, like, what are they going to say? What are they going to say? They know they're overspending, and it's because Mark wants to overspend. That's what's clear from this, that Mark believes in this. I actually, when he was talking, I believe he believes it's going to happen. That actually makes me feel better, honestly, because I'm betting on Mark. I'm not actually betting just on Oculus. I'm betting that Mark is an executioner. Is good at executing, obviously, and that I'm betting on him doing it again. And he's done it so many times. Can you bring up a chart of like Meta for the last 15 years? I want to show you the number of drawdowns to 50% or so that Meta has had, and each time they've said the story's over. People ignore the past all the time. Based on Mark, I'm talking about Mark being good at his job. And I see a lot of comments, just pure hate. Like a lot of comments here, people are not actually looking at the quality of the company, what they're doing. I bet you they've never used Oculus. Like these comments coming into, that I see to the side, just pure haters here. There's so many, like Adina, just a hater. I'm calling out people by their names.
Those bags are getting kind of heavy, aren't they? What's your cost basis on Meta? 220?
Oh, Meta 250. Yeah.
Oh my gosh.
No, but dude, I've been in so many different companies that tank, you accumulate. If you believe in it, you wait it out. You have to wait 5 years. Like I give you perfect examples, even Bitcoin, Ethereum. I know those are cryptos, but I was there during the bull run. I didn't sell. I saw my $20,000 Bitcoin go down to $3,000. I didn't sell because I believe in the narrative. This is a similar thing. There's a narrative here that's at play. Either you believe it or you don't. and you hold your bags and you shut the F up, you man up and you just wait. Okay. If you're running into out of these companies, these growth stocks every 6 months, like you're running into DNA every 3 weeks, it's not going to work out. It's just not. You either have to hold it and just wait, put it aside and leave it alone. That's what you have to do. If you don't want to do that with Meta, I understand. Some people want to do that with Tesla, which I have more of. Enphase is obviously a better bet, but I can't have all my money in 2 stocks. I don't want to do that. I want to spread it around to big bets that I think might work out. Meta
What
being
about
one of them.
this comment right here? Jay Schwartz says the biggest problem is FANG from 2000 to 2020 has made people forget that companies do fail, and that Facebook. I think the implication of this is Facebook could be a Yahoo. I think that's his argument.
Okay, let's follow this thread. Who's the real competitor to Facebook? Like all these apps we just talked about, who is the competitor here that's taking over this market?
There's not a real other social network that exists.
Let this guy answer. Who is the actual competitor we're competing against besides ourselves as Meta investors?
Yeah, TikTok is for video, YouTube's for video, LinkedIn is for professional stuff, Twitter is for stupid
Nobody.
Nobody. and even if Elon wants to redo Twitter, he's not going to get 3 billion people.
Yeah, I mean, I see these MySpace comments coming up and all this stuff, but like, who is the actual competitor that's destroying Instagram, Facebook, WhatsApp, and even Oculus? Who is it? Tell me, and then I'll invest in them. That's right. I shut you all the F up. So
Apple? No, it's not.
No, they're not. I mean, maybe one day they will be. Maybe they will be a competitor. I think Amit has just left his own stream, so I'm taking over.
My bags are too heavy, man. What's going on?
I'll give you another example. Look, I'm not even the biggest Meta bull. It's a small position in my portfolio, but to say that they're failing is absolutely insane. There's no actual competition for them. Okay, people keep talking about TikTok, which is tiny compared to anything that actually Meta is doing. And Snapchat, they're dying. They're not profitable. Okay, so if you were talking about competition, maybe Snapchat a little bit, they're not even profitable. They're not even making as much money as Meta. We know that. Google, they failed all the social experiments they've tried. Twitter,
that's true.
Twitter, maybe Elon will save it, but dude, that's gonna take a decade. So who's in charge in the next 5 years? It's one company. Okay, let's just face it. Face facts. Meta's a monopoly. People don't just want to face it because they hate it. Okay, they hate it, but I love monopolies. Okay, I love Google. I love Meta. I love Enphase, and it's because they're monopolies. It's not for any other reason.
Very Peter Thiel type of
you.
argument there, and you know it's also very true. Like there is no competition also in the respects of the fact that on advertising, as you said, Snapchat ads suck. Twitter ads, no one clicks on them. YouTube ads are good, but like that's only for video. Like if you're starting a t-shirt brand tomorrow, you need people to see your fucking t-shirt, which means you got to put it in front of people. And it's like Facebook's the one place that you're going to go. Jay Schwartz says, I really did not follow your question. Why does a competitor need to be in the same line of business? Jay Schwartz, I don't understand your response. If there's no competitor...
Why does the competitor need to be in this? Well, no. He was saying that people are saying Meta is the new MySpace or whatever. I'm saying, who is the replacement? That's
my point, right? Like there has to attention will always shift somewhere, and Facebook might not be around 20 years from now. But until we see the clear place attention is shifting, they think it's shifting to the metaverse. And Zuckerberg has been very explicit that he thinks blogging and two-dimensional forms of content is and non-immersive computing is just not what the next 2 decades are going to look like. And that's the bet you have to make on them.
And that's obvious, by the way. The thing is, I don't think anyone in the comments would say that's not obvious, that we're all going to be wearing AR glasses and communicating through computers in a different way, because this 2D shit, it works now. It's fine. But I can't imagine my kids will grow up and do the same thing that we're doing. It just sounds silly. Who's actually arguing against that? The problem is, in the meantime, someone has to build it and someone has to lose a fucking gobs of money. That's the problem. And as Meta investors, we're basically getting a dick in our ass while this all happens.
Well, the one pushback is the amount of time we spend per day in that headset, I don't think is ever going to compare to the amount of time we spend on this.
Well,
I think you would agree
the
on
same
that.
thing could have said 15 years ago.
Let's be logical. You're not going to wear a fucking headset for 10 hours.
No,
I'm on this thing for 10 hours a day.
So you're thinking, hold on, you're thinking this.
Yeah, because they didn't figure out how to make it a little sleek thing yet.
I just broke it.
Look at it. Your bags.
Yeah. let me get in focus. But you're thinking it's this thing on your head for the next 10 years. That's not true. This is version 1 or 2 of what's happening. It's going to be these AR glasses, and we're all going to have them, just like you're wearing your glasses right now. It's just the
You
computing
think
power
this is
hard.
going to be AR? You think this is going to have? You think that's going to?
I'm
be
not
it?
saying this is a year from now, by the way. I'm saying this is the long tail of it that Meta's working towards. And if people in the comments who weren't so hating were actually watching Mark's research department do all these videos on the things they're doing with lenses and computing and the AI, they would not look at it. It's just Meta has such a bad name that everyone just right away associates like Facebook is an evil company. They associate that. And maybe that's why Mark even changed the name, just so that 5 years from now, no one's associating Facebook with Meta and he can have a fresh new start in terms of when he develops this properly. And it's going to take a long time.
Jay Shawad, I think you're making an incorrect argument here. He says, which was the last breakthrough technology that became a household necessity that required the creator to lose billions of dollars before making money? Did Apple have to lose $100 billion before the iPhone blew up? I have some thoughts on that, but you can go first if you have thoughts.
Yeah, I mean, Apple wasn't the first people to really make phones that came out,
Yep.
even smartphones. So there was already technology that developed for that. And so Meta is taking it upon themselves to develop a lot of the tech to make these things accessible, last long. The batteries are a problem, obviously, making them smaller. So I think Meta's...
Also, it's harder than making a fucking phone. Like a phone is relatively easy at the
Well,
end
the
of
point is they weren't the first. So he's bringing up Apple, but they weren't the phone.
But my point is on an apples to apples comparison, what's harder? Making a box with a screen or making something that you have to be immersed in?
Right.
Like, it's difficult. I mean, and Apple, that's why Apple hasn't put it out yet.
Yeah,
It's fucking hard.
in fact, my background is computer science, for those people don't know. This stuff uses something called SLAM, which is simultaneous localization and mapping. That technology wasn't around like 15 years ago properly. Like you couldn't do it. It's only because now we have this accessible, this type of technology and this computational processors to do it, that these cameras can tell where you even are. This wasn't possible like, let's say 5 years ago, 6 years ago. The correct way, the way it is right now, you know? Like the first version, I forget when it started, 8 years ago, whatever. But you get my point that there was a time period before where it wasn't even possible. And it's the same thing, that this is all developing and someone has to do it. That's the thing. Someone's going to take over this market. It could be Apple, which I totally agree might happen. But who's number 2? Someone has to be number 2 as well. Who's the Android? That's all I'm saying, that it seems like the Android might actually be Facebook or Meta, whatever they want to call themselves.
Or they might be the Apple. Yeah. I think also the Apple comparison is a little, I don't know. It just feels weird because there also weren't 5 billion people online back into that. Like there wasn't this whole revolution of anyone can build an app and offer, you know, the ability to access content. Like we have a whole different landscape now. And in 2008, what was getting your attention? ABC, NBC, Fox. In 2022, Facebook is competing with everything that's going for your attention because they monetize attention.
Right.
So of course they have to lose billions of dollars to make the best product in the world from a software hardware perspective that Apple didn't have to do because Apple wasn't competing with that many sources of attention back in 2008. Chris says, Vitaly, do you think Meta needs to slow down with the metaverse until the tech catches up?
Oh,
I think he means spending.
And I don't think they should slow down in terms of, he means growing it. If that's what he means, no. I think the problem is they shouldn't be spending more than a certain amount. If that's what you call a slowdown, I feel like they're ramping up a little bit too fast, considering that they had all these problems in 2022 that they weren't making enough cash. They should have foreseen this happening, basically. Like Mark is a good operator. He should have foreseen that his stock would get hammered. It'd be harder then to raise funds, to give engineers bonuses and blah, blah, blah. So I think he's making it harder for himself by doing a PR nightmare with Meta, the actual name. But he shouldn't slow down actually developing the tech. That would be a major problem. I don't think he should do that. But besides developing the tech, he did hire a lot of game designers, people just like on the periphery of the metaverse too, to help build out. He's buying companies. So there's a lot of spend going on that he could slow down that part while still developing the tech while it builds up, you know?
Meta's at 104.85.
Oh my God. Oh my God. I gotta go jump off a
You gotta go buy. Are you buying more tomorrow? What are your thoughts?
Yes, at $100. So I have very specific levels. At $100, I'm going to do a call option, maybe 2 call options. Some guy in the chat also posted out that Meta's free cash flow, that they're dying. Okay, that they're actually dying. I'm looking at their trailing 12 months right now. Can I share screen? I don't know if I could do that.
Yeah, you share it and then I'll approve it. You got it.
Let me see. Present, share screen.
Oh man, $104. Goodness gracious.
Okay, am I sharing?
You're sharing both of us. Oh, there you are. Yeah. So go there. Yep.
So someone pointed out that they're not making any free cash flow, or they're losing free cash flow. I mean, okay, I want to go over. I don't have all the data here, but trailing 12 months of $35 billion in free cash flow. Okay. And I think everybody's looking at this number, this unusual time when it was 40 billion, basically. So now it's a big decrease. But why don't you look at 2018 even? I don't have all the data, of course, but it was 15 billion. Dude, they're at 35 billion. The year hasn't ended. Okay. So all of these doomsayers about Meta, you're ridiculous, honestly. The other thing I want to point out, are you there, Amit?
Yep, I'm there.
The other thing I want to point out, what are super investors doing? I know this has been going around the internet, but what are they doing? Are they buying it or selling it? So we'll find out more. We should keep track of this and check again. But let me see. Added 1.4%, added 0.19, reduced, added 200, added 136. So there's some people who are not reducing as much as they're adding. It's kind of interesting when billionaires are adding this stock and we retail investors are running out. So I don't know. It just seems like, hold on, let me stop sharing for a second. Are we back?
Yeah, you're good. Yep, you're good.
It just seems like if you pay attention to other signals besides you hating Mark Zuckerberg and thinking he's a robot, there's a lot of positives that they're doing that is a long-term investor mindset, not a short-term. This is not going to work out in the next 6 months. You could forget about it. Totally pointless in the next 6 months.
Do you think there is a world in a version of reality in which Zucks cannot overcome the negative press, and as a result of that, Meta does not survive? Cisco took 12 years to recover. I know Cisco is a totally different company, but is there a world in which that happens?
I think at the end of the day, innovation is what counts. I think Cisco stopped innovating. I think that's the main problem. That if Meta does stop innovating and all you heard about every quarter was just about Facebook and their daily active users, I would not be an investor. So I would think
I agree.
So to me, the whole bull case is that he is innovating. He's spending a lot of money innovating, of course, and maybe made some miscalculations in terms of changing the name and all that. But that's why he might actually succeed, because he is innovating. And if you follow Elon, like we see a bunch of Elon fans here, Elon says the only differentiation between success and not is to keep innovating. That's it. Yep. That you cannot stop innovating. And this mother effer lover, is that what I have to say? This mother lover is innovating at an insane pace. And you guys are shitting on him because you don't like him. You guys are the dicks. Sorry. I mean, but that's what it seems like.
And why do you think people don't like him? It's because they think,
well, he was a dickhead. Can I say dickhead on this podcast?
Sure, you could say it. But dickhead in the context. I think this goes back to the reason I think the left hates him is because they think he's responsible for Trump.
Yeah.
Correct?
Yeah.
The reason why the right hates him is because they think he's censoring.
Yeah, exactly.
In reality, he's just trying to manage 3 billion people in one place.
Exactly. He's just trying to make a living, basically. A lot of money, of course, but no, but it's true. That's what he's trying to do. And his job is impossible. Like, think about it. If you were like, how can you please everybody? You can't, especially when 3 billion people are looking at you. It's impossible. So I think a lot of people hate him because of what has happened with Facebook. And in the past, well, hold on. A lot of people hate him because of the past of Facebook. And I understand. I didn't like him too. I actually don't like him for what he did with Facebook. I'm not investing in Facebook. I keep going back to it. I'm investing because he's showing accelerated growth in this whole new computing platform. And I think that's a real platform. I don't think it's pie in the sky. I think this is going to be legit. I don't know if it takes 5 years or the 10 years, but fine, I'll wait. I have Enphase exploding. I have Tesla exploding. Some of my stocks will not explode, and they'll explode in 10 years. But you bet your ass Meta's not staying at $100. It's either going bankrupt because they spent all the money, or they're going 10x. Those are the only two options for Meta.
I think that's how I feel about it. It's not staying at a fucking $100. And this seems like a really unique opportunity. This is, the recession 2008 is where a lot of millionaires were made, right? This might be one of those stocks that turns you into a fucking millionaire.
This is what I'm saying. Look, and I'm not going all in Meta. I'm not saying that. I'm saying I'm putting a small, I think less than 5% of my portfolio will be in Meta. When all is said and done, probably 5%. Okay. Meaning my calls, my shares. And then I'm just going to wait 2025 for the calls. And obviously the shares I'm keeping till 2030 at least. I don't think this is going to play out in a couple of years. So see what happens. And if I'm right, I'm going to walk away very happy. And all the haters who don't understand the technology part of it, how hard this is, they don't understand how hard this is. They think anyone could come along and make this. This is fucking hard. I'm an engineer. I keep telling people, this is fucking hard. No one's just going to come in and just do it just because they want to. It doesn't work that way. Fucking grow up.
Do you think it was worth? Do you think it was worth 1,500? That's okay for the Quest.
The Quest, I'm not buying it. I don't think it's worth 1,500 for me. I'm not that user. I'm not the pro user who's going to be using it for those situations. But if I am a CAD designer working in virtual reality, trying to share a product like a car or a piece of engineering or even a circuit board, which I do need those things in my other life when I was a computer engineer for real, I would love to have that to share. And that's where this is going to fit in, this $1,500. This is not a breakaway. This product is meant literally to get the foot in the door. And then what he wants to do is get that technology down into the Quest 3 or the Quest 4. That's what he wants to do. He just can't do that right now. So you watch, that technology is going to trickle down to the Quest 3, the Quest 4. And that's where we as retail people will benefit from it. And nobody else is doing this. This is what's crazy. Like I keep going back to, who is the competition? Who just sold 10 million units of this?
Yeah, it's not a bad point with the stock dropping 20%.
No, but honestly, all these comments, tell me who sold 10 million units of these? Give me one example. Maybe I can invest in them.
And no, you've got a good point. You've got a very good point. Oh, well, the other thing I was gonna say is Macs are like $1,500-$1,600, but people pay a premium because it's a really good computer, right? I think that's a little bit of the same of the logic there when it comes to the Quest. All right. I think that's it. Shout out to 330 people being here. Please check out Vitaly's channel if you liked any of his stuff that he said, and he said a lot of stuff. It's in the description. Definitely recommend checking it out. I'm saying this honestly. He has one of the best finance channels on YouTube with his co-partner Carlos. So definitely check them out. Big Tesla Enphase bulls. Good debates on their channel. I think this was a good discussion. I guess we'll see what's. I'm thinking of starting a position tomorrow. I mean, I'm getting very excited, especially if it gets to 101, 102.
Remember, if you start a position, you can't sell out of it like in a week because it might go to 70. We don't know. We don't know that future. I'm not investing for next week. And a lot of people I feel like who are on YouTube are trying to become millionaires overnight. They don't understand it's a 10-year journey. Like it is a 10-year journey. If you want to make $1 million, it's a 10-year journey for any of that kind of stuff.
Right. Okay.
All right.
Sounds good. Thank you everybody for joining there. Check out links in the description and we'll see you on the next one.
All right, later, bye.
Bye, everybody.
Thank you.